Welcome in this video. When is Xcn coin giant rise? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. On the chart, we can see a remarkable downtrend structure that has been in place for a long time. This structure makes it clear that the price has been moving downwards in line with a certain trend and has encountered a prominent resistance line at every bullish attempt. So far, the price has repeatedly touched this falling trend line, and although it is felt that it has gathered significant energy for a breakout, it has not been successful in breaking through this resistance line. However, this failure can be interpreted as the footsteps of a potential success, because technical analysis knows that the more a trend is tested, the more likely it is to break. This struggle of the price against the downtrend shows the determination of buyers and the willingness of the market to recover. Although downtrends are often seen as a negative signal by investors, breaking such structures can lead to strong and rapid rises. This is because the pressure accumulated under this trend line is suddenly released as soon as the breakout occurs. This brings sudden and high-volume movements in the market. Looking at the current structure, it seems that every contact of the price with this falling trend line has caused a new accumulation of energy in the market. The power behind these contacts is currently slowly accumulating its potential and will be ready for a breakout when the appropriate environment is created. An important point to keep in mind is this. In technical analysis, when the price breaks through a resistance line, it is not only a visual crossing of a line, it's also the breaking of a psychological barrier. The falling trend line that we're currently observing represents levels where traders have sold off in the past, cautious and lacking confidence. But if the price manages to break through this area, it will not only be a technical achievement, but it will also mean that the market has crossed a psychological threshold. This would lead to new waves of buying, more investors entering the market from the sidelines, and increased volumes. Trend breaks are also harbingers of structural transformations. Breaking through a falling trend line indicates that buyers have become stronger and selling pressure has been broken. Especially in such breakouts, if the price is supported by volume, the chances of the uptrend being sustainable are much higher. In the current situation, the proximity of the price to this trend line constitutes an extremely critical monitoring point for investors. Because if the price breaks this level on volume, it could target the previously seen highs, and this move could initiate a positive transformation in the overall structure of the market. Moreover, the structures that may form on a downtrend breakout could also be quite promising. For example, if the price retests this level after the breakout, and if it receives support from this level, this move confirms the bullish continuation. In technical analysis, this pattern is called a breakout retest and is considered highly reliable. In the current outlook, we can see that all the conditions that will form the basis for these potential developments are gradually maturing. The price's approach to the falling trend line gives the impression that it is preparing for a final touch and a strong upside move. When all these technical factors come together, a serious price movement can be expected with the break of the falling trend line. It is possible that the price will gain momentum, especially as investors who have sold near this trend line in the past are now repositioning. This breakout not only changes the direction of the price, but also completely transforms investor psychology. It signals a transition from the perception of a bear market to a bull market, and this transition can cause many investors to reassure and open new positions. But we cannot decide the analysis with trends alone. Let's look at other metrics. Stay tuned. When we look at the current structure of the market according to the Elliott wave theory, we are currently in a very critical and strategic area. When we evaluate the waves on the chart, we are currently in the second wave, and the third wave, which is expected to follow this second wave, is considered one of the strongest and most effective movements in the world of technical analysis. Because according to Elliott's classic rules, the third wave is always the longest and most dynamic. Therefore, the current sideways movements, corrections, or consolidation processes may actually be the preparatory stage for a big rise. Second waves are usually a time of hesitation, indecision, and psychological testing in the market. While some traders may think that they are too late for the first wave's rise, others may still be hesitant to open positions, thinking that the correction will continue. For this reason, second waves are often flat or with slight pullbacks. But this serves as a warning to investors. This calm may be the calm before the storm. This is exactly what we are observing in the current market structure. Signs such as prices holding at certain levels, continuous buying reactions from support zones, and the preservation of upward momentum despite declining volumes suggest that the second wave is nearing its end. If all goes according to the rules, the third wave following the second wave could be a much more voluminous, aggressive, and stable bullish wave. According to Elliott's rules, this wave usually goes up to the 1/618 Fibonacci extension level, but depending on the market's enthusiasm and volume, it can often reach higher levels such as 272. These levels are not ordinary targets, but projection areas that are considered very important in technical analysis. When the third wave begins, reaching these areas usually means confirmation that the market has fully entered a new uptrend. The most characteristic feature of the third wave is the complete disappearance of market indecision. Buyers become bolder, resistances are easily overcome, corrections remain shallow, and a bullish mood prevails. This boosts investor confidence and attracts new entries. The current technical outlook signals that this scenario is possible. If the second wave is completed here, prices could suddenly accelerate and the previous highs could be quickly surpassed. Another important factor is the timing factor. The third wave is a faster developing wave not only in terms of price but also in terms of time. Therefore, taking a position after the start of this wave may reduce the potential rate of gain. Therefore, it is important for investors who think that the second wave is nearing its end to take strategic steps by anticipating the momentum that the third wave will bring. During this period, entry opportunities with high risk-return ratios may arise. Because the target of the third wave is usually 1/618 to 272 times the first wave, and significant gains can be made if the price advances to these levels. Also, investor psychology changes significantly during the third wave. Market players who were initially cautious are now more optimistic in this wave. Fundamental news flow often goes in line with the price and supports the rise. This creates a positive synchronization between technical and fundamental analysis. Such synchronization increases the credibility of the third wave. Therefore, it would be best to view the current second wave as a preparatory phase. The analyses, targets set, and strategies developed during this process will enable investors to act with determination and confidence when the third wave arrives. In conclusion, the current second wave is an important component of the Elliott wave theory and carries promising signals for the upcoming third wave. The vortex indicator, one of the most frequently used indicators in the world of technical analysis, and one of the indicators that traders attach great importance to in terms of determining direction, is a very effective tool in capturing the signals of change in market dynamics. This indicator makes a great contribution, especially in understanding trend reversals or whether the trend will continue. In particular, the movements represented by the blue and red lines provide important information about the direction of the price. When analyzing the chart, the position of the blue line on the vortex indicator is extremely critical. This line represents buyer power and positive momentum in the market. If this blue line crosses above the red seller's line, this indicates that the buy side is gaining strength and the bullish movement in the market will gain momentum. In particular, such crossovers and upside breakouts can herald a new bull trend. Such signals are usually followed by strong positive price movements. In the current situation, the structure observed in the vortex indicator looks quite promising. The blue line is trending upwards from below, and if it continues to do so and crosses above the red line, this could be the beginning of not only short-term, but also medium and long-term uptrends. This is because such crossovers have been seen in the past as a preliminary signal for many successful price moves. In particular, the price explosions following the upward breakout of the blue line have increased the reliability of this indicator. Another thing to note at this point is that the vortex indicator is not only limited to the crossover, but also the speed at which the lines open. In other words, if the blue line is going up and the red line is deepening down and the distance between them is widening, this indicates that the strength of the trend is increasing and there is a clear directional trend in the market. Vortex shows us the trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.